Welcome back. You're watching the ET Money Show with me, Kavita Thapliyal, and this is the last leg of the show where there are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Hemant Rustagi, Wise Invest Private Limited. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571, or you can email us your queries on the money show at etnow.tv. Good evening, Hemant, and welcome to the show. There's this first question for you, which is from Arjun Singh, and he says that he's currently investing 20% of his monthly income through SIP, and the funds are ICICI Pru Multi-Asset, ICICI Pru Nifty Index Fund, Quant Mid Cap Fund, SBI Contra, and SBI Small Cap Fund, and he has a good exposure in debt instruments, which includes FTRT, NSE, LIC, and 30% of his monthly income. That's the ratio. So we don't have him on the phone line to ask more questions about what exactly is his goal to this portfolio. I also see him, he's marked the duration, investment duration for each fund. That's what I can see. How exactly does this allocation look to you, and how much would he be able to allocate, say, in 5 to 7 years?
Well, Kavita, there are two parts to his portfolio. One, obviously, there are equity funds, there are debt funds, debt instruments rather. So if you look at equity, I think broadly, I would say the fund selection is pretty good. And I can see that there is long-term horizon for each of the investment that he has. And wherever he doesn't have 10, 15 years, he's actually gone into funds which are either multi-asset or large, where there's a bias towards a large cap. So I think broadly, I would say that as far as the equity fund is concerned, equity portfolio is concerned, the fund selection is good. Only one or two things I think you need to remember is that, like, I can see that for a 15-year goal, if there is only one small cap fund, even if you have that much time on hand, you need to still have diversification in the portfolio in terms of exposure to different market segments. So I think that's the only aspect I would like him to kind of remember for doing future allocations. As far as the debt instruments are concerned, I can see almost the entire investment in traditional options there. I think that on the debt side, there are a couple of other opportunities for him which he can consider to improve his pre-tax and post-tax return. Now, for example, these mutual funds have this target maturity fund. So these are passively managed debt funds, open-ended funds. The underlying is basically the government securities, public sector bonds, STLs. Now, what happens is that we know that we are almost at the fag end of the interest rate hike cycle. Maybe you get to see one more after this, but I think we're almost at the peak now. So this is a good chance for someone who wants to invest money, lock in money at the current yield, and does not want to face any volatility during this period. But of course, the time horizon in that case has to be 4 to 5 years. And considering that he's investing in FDs and NSEs, I'm assuming that he will have that kind of time on hand. So target maturity fund is something that he should look at. And I think the major benefit, apart from the fact that he will get to lock in at the current yield, is the tax benefits in terms of indexation. So, for example, if the yield is, let's say, around 7.4, and if the inflation is at 6, he's going to pay 20% tax on 1.4. So, post-tax return is going to be much higher than others. So, I think that one instrument that he should definitely consider for the debt portfolio. On equity side, as I mentioned, I think he's doing well.
Right, it would have been nice if we had him on the phone line as well. But anyways, we move on to our next viewer, Prashant. Do we have him on the phone? Okay. So he says that we have his question. He wants to understand if he can stay put in an IT fund or shift to a NASDAQ fund. He's holding ABSL Digital India Fund.
But that's an interesting question. I think there are, again, a couple of things that Prashant will have to kind of consider before making the right choice. On one hand, we're talking about IT fund, which are basically investing in the domestic IT companies. On the other hand, we're talking about, let's say, NASDAQ 100, which is obviously we're talking about international investing. So let me address, the pros and cons of IT fund. We know that IT as a sector has been doing very well, but in the last 1 year, for a number of factors like higher inflation, interest rate hike, slowdown in US, we've seen the sector underperforming. But I think it will be fair to say that the the worst is over for the sector. Maybe you will see a couple of more quarters of uncertainty there, but I think the worst is almost over there. But important thing is that if he has a portfolio of other domestic funds, he should, if he analyzes the portfolio of those domestic fund, he'll find that, collectively, he should be having, I think, around 8 to 10% exposure already to IT sector in India. So the point here is that if you already have other funds and you have exposure of 8 to 10% in your entire portfolio, do you really need to invest in a sector fund? As we all know, the definition of sector fund, the universe is very narrow. They have the tendency to be volatile from time to time because there's no protection of diversification. So I think that's one factor he needs to consider. On the other side, when we talk about NASDAQ 100, this is much more broad-based. And as I mentioned, it adds a new dimension to the portfolio because it allows you to invest in some of the largest companies in the world in varied fields. Of course, the major sector there is technology, but then apart from that, there are financials, there is healthcare, there is consumer service, there is telecommunication. So I believe that it will be a good idea that if he doesn't have any exposure to international market, he should consider investing in NASDAQ 100. Yes, it's true that NASDAQ 100 itself is under pressure and may remain under pressure for the next couple of quarters. But like I mentioned, it makes a lot of sense to add an international fund, and because it adds a new dimension to the portfolio. So my recommendation is, provided he has existing portfolio and there is exposure to IT sector, he should consider NASDAQ 100, I think, which will be a good addition to the portfolio.
All right, so that's the solution for Prashant and his financial portfolio. With that, the time is up for us today, Hemant, but thank you so much for being on the show and helping our viewers with their financial portfolio.